Dornbush download 177. Andrew and Dan, you are incredibly close to me. You are incredibly...
Come on, Andrew. You know we're friendly in the office.
Probably far too friendly.
Am I too far away now?
No, that's all good. Andrew in the personal space. Anyway, good morning, and interesting month that we've finished up on.
Been a really interesting month, hasn't it?
Just looking at movements in markets, even just from a trading figures and volumes going through the business, like double January from a volume point of view. But not really surprising considering all the volatility. You think back at the beginning of the month, the world was ending, people are running around with their hair on fire. Here we are, we're basically within about 70 points of where we were at the beginning of the month.
Yep. US got back to 25.5 or almost to 25.5.
Huge volatility. What's your sort of take on, is this a good thing? Is this a bad thing? I mean, from a business point of view, it's great because if our volumes have doubled, but from the trusty Dornbush download viewer, all 622 of you.
Wow.
Hi again, Mum. What are your thoughts?
Andrew, I think the volatility is a good thing because it enables some buying for people with that horizon. I think, the volatility, perhaps the volatility that we keep hearing about at the end of the year is going to be more of an issue for us.
Yeah. And we're talking more downward volatility rather than upward.
Yeah. And there's a few things, isn't there? Like, US inflation is going to probably start to tick up now. That's, one thing they're talking about. Interest rates in the US.
The new chair of the Fed, Jerome, name escaped me, Jerome was talking about there could be up to 4 interest rate rises this year. The market had only been factoring in 3, and of course we had a little bit of a wobble overnight just on that news,
Yeah.
So
Trump might go charging into a building head first.
What did he say overnight? If I was there at the Florida shooting, I would have tackled the guy unarmed.
Yeah.
I mean, if he had 20 Secret Service agents behind him, that might make him feel a little braver. But in all seriousness, not that the shooting wasn't serious, of course, but yeah, I think it's just, I'm with you, volatility's back. And for clients who are prepared for it, and what we mean by that is having a bit of a stash, having a little bit of money up your sleeve. I'm saying to all my clients, my opening mantra is, do you have 20% of the portfolio in cash? And if the answer I'm getting is no, it's like, well, why not? Why don't you? In particular, if you're a self-managed super fund, just from a prudence of paying pensions and all that type of stuff, but even, dare I put you and I together from a young person's point of view, there's a bit of grey going on there, and I'm follically challenged, having that ammunition there ready to go for when this volatility kicks in, because we've really been complacent as a market for the last 2 years. It's just done this.
Yeah.
So,
and I just wonder whether we've seen the end of the downside. Things look good, but the market always has a sting in the tail, don't they? And if there is another downside, people will panic on that, and that will be the buying opportunity, I think.
And historically, February, March, and a little bit of April tends to be quite strong. And then from about April onwards, once those banks have reported their profits and they go ex-dividend into May, the old sell in May and go away cliche holds a lot of water statistically.
Yeah.
July is usually an okay month, but the rest of them are average to down, and then it sort of starts kicking back up again in sort of late October, early November. So, yeah, I guess our mantra is, we're comfortable with volatility, but have some cash to take advantage of that.
Yeah.
Second thing?
A lot of, Andrew, I think the miners, though, we keep seeing these stories about world growth. And if the world's growing, there's going to be a lot of commodities being used. So
Copper,
lithium. Iron ore, lithium with these electric vehicles. So, on one hand, it's the yield play, isn't it? But on the other hand, it's got to be the growth play.
But it depends on what type of investor you are. You're a self-funded retiree. You probably don't want to be overweight or BHP.
No, but not overweight. But you should. It's prudent to have a holding in those miners, isn't it? Just to get that growth, and we've seen that. In the last 8 months since the banks have been sold.
Would you pay $31 a BHP? Like me, Andrew the Miserable would probably wait for a pullback in 28, 29.
If you get a pullback.
And that's the whole thing we're talking about.
That's the whole thing.
That volatility and being ready to take advantage. And I guess what Dan and I are saying is having that shopping list.
Yeah.
What are things on my shopping list? So to me, Challenger at about $12 would be on the shopping list. BHP at $29 would be on the shopping list, what type of investor are you, and being a bit more selective. Whereas over the last 2 years, because the market was just doing this, you could pretty much just buy it now. Now it's being a little bit, well, we're now back sort of at relative highs. Let's just hold fire, maybe even take a little bit of money off the table and wait for that opportunity.
And I think that money off the table is those stocks that are subject to US interest rates, and Sydney Airports, Transurban's one, what's the Macquarie one? MQA?
Macquarie Atlas.
Macquarie Atlas is another.
APA.
Yep. I see they're pulling their APA or AFN HAs off the market as well now. So.
And they're doing a bit of a capital raise. So certainly, and I think you went to a conference yesterday that sort of touched on that, didn't it?
Touched on a few of those things, and he was saying going forward... He being Paul...
Surname unknown from?
Yeah, PM Capital.
Excellent. Paul
M.
His capital. Hello, Paul M. Yes.
It's not Morgan. Oh, you got me there.
Focus, grasshopper, focus. Anyway, what were some of the things in the conference?
He's really talking about going forward. He likes global banks, and on the interest rate rises, he seems to think that'll do well with global banks.
Yep.
That might flow onto our banks as well, Andrew. The negatives are the infrastructure and the REITs that have a lot of borrowings.
So the listed property trusts.
Real estate investment trusts. Yep.
Okay. So it sounds like from your point of view it was more optimistic than pessimistic, but not sort of a broad brush. Everything is fantastic. It's these are the particular areas that we should be looking at.
Yes.
Last thing before...
Mind you, he's global though. So,
Last thing before Lindsay falls asleep on us, relating to our friends from 1300 Web Pro. Love your work. Profit reporting season, in particular this week.
It's been good, Andrew, really. Like the big picture for profit reporting season, what do they reckon? Over 50% have reported better than what they told the market.
Which is great.
So,
Had a couple of shockers today, though. We had Ramsay. Even though it met guidance, it was only because it didn't pay enough tax. Its tax bill had been reduced. Compliant with its tax payments. Harvey Norman coming out with a downgrade, not a downgrade, write-downs relating to their dairy business. Who knew that Harvey Norman had a dairy business? But Noni B up. So people are out there buying women's clothing. Not you or I, not that I'm aware of anyway. So
this is Wielandt.
Oh, look, I'm on first name basis with the, the Australia Post Fast Track, the guy with the blue van. Yes. I'm on first names basis with him. I can hear him coming with his music playing and his hello.
It's like Mr. Whippy, isn't it, for him?
Hello, sir. How are you? So anyway, online shopping, gotta love it. But support your local retailer equally as well. Till next week.
Thanks.
Thank you.